Good weekend, all. Ira Epstein, and here we are with your weekend edition of your SPDR ETF stock market wrap-up. And weekend means we're going to look at weekly charts. And it's an interesting week because not only is the stock market up, and if you get my morning subscription videos, I have been pushing you, as you know, hard, telling you that you've had since October 26th, the S&P into a seasonal uptrend, and it just magically worked. Now the other two have joined in. They joined in last week, and I gave you when they did it. In fact, I was talking even here in these free videos and explaining where the seasonals were. Coming up at the end of this week, you start getting a little nervous because some profit taking is likely in order. Is the rally that we've seen limited to the United States? Absolutely not. It is spread across borders. It's going on in Europe and many other countries. So if you pay attention and you even look at China, their markets have been gradually coming up as well. So there's a phenomena here. Why? In part because central banks across the world are going into a pause mode. I didn't say they're in the cutting mode yet. Pause can lead to another hike if inflation sticks its head up, but they want to go into the pause. Now, the marketplace is saying, hey, rates are going to go down. The Fed is through. The other central banks are through. You can hear what they say, and what central bankers always do is they don't say, hey, we're just going to come out and they're going to get super dovish. They won't do that, and that's not the nature of what they do. Instead, they'll be cautious. They're going to give the market time, and that time is working in its favor. Labor is staying strong. If there's a recession that hits, people think Germany's already in one, to give you an example. But if a recession hits in the United States, because our labor is so strong, it would be very, very mild. That's if it hits. What happens in these countries if interest rates come down, including in Germany? If they were to drop enough, business would start picking up, the psyche of the market would pick up, a wave go back into the event. The problem is one of timing. You're not going to go from this strong of a labor market in the United States all of a sudden into a recession. I don't buy that that's going to happen at all. The opposite, in fact. You can go into a choppiness, but I think there'd be an upside bias through the market. Now, before I get too far, this is Black Friday. And with Black Friday, I'd like to bring you up to date with the sale that we're having. This is our Cyber Week sale. Let me review it with you and we'll take it together here. You get a free course, and I'll explain the course with any 1-year subscription to any of my research. Now, certain restrictions apply. If you're an existing 1-year subscriber, call your Ira Epstein broker. Do that because there are restrictions. Example, you have an existing one for the ETF and you want to switch it and go to the futures and drop that one. We're not giving away the 1-year course with that. But you're an existing ETF subscriber and you want to add to it, move up to a combo or something that's much higher priced. Absolutely, we're going to do that. And what courses can you choose from? My full charting course. That's going to be there. And by the way, if you wait a little bit, you'll get the new one for free. So if you postpone it by, let's say, 4 weeks, instead of taking the one that's existing, you'll get the brand new one. I'm saying 4, could be 6, but it'll be in that course. $600 course. None of my subscriptions run that. They run about $160 to $280. My full research subscription, that's more. If you have an account with us, that is normally, if you have an account, I think it's $480, and if you don't, it's about $600 a year. But you get these courses. Now, let me go through the pricing. This course is about $600 by itself. My SPDR ETF course is about $120. My outside day course, about $120. So you put them all together, you're almost coming in on the morning subscriber videos for free, just about there. And of course, the big deal is the charting course that you get if you choose that one. And as I say, there'll be a brand new one that's coming out. I'm probably halfway through with it. I'm going to work like a dog tomorrow on it. I'll get beyond that, and then I've got a couple of weeks to finish it up. I think I'll be close. How do you get this? A couple of ways. You first can call my staff. Do it business hours, Monday through Friday, anytime after, say, 7:30 in the morning. That'd be fine. They're there typically, and they'll pick up till about 4 or 5 in the afternoon, Central Time. Or you can just go online to do it. Now you move your cursor to the top here, you'll see an icon. There is no link that we're going to give you because it's a hidden web page on the website. But when you click that, it'll take you right into the area. You can do it. And remember, you can give any of these courses away that you choose for free as well. In other words, instead of you taking the course, you tell us to give it to somebody, you buy the subscription for yourself and you give that. Pretty good deal. It's going to last a very short period of time. If you have questions, call my staff. You can view this again, move your cursor here, and now let's go back to the charts and finish up there. So we had been working with Zoom, if you'll remember. And this is what the chart looked like, and it's been an ugly chart. This is a stock that literally collapsed. Has it found its footing is really the question. A lot of the markets that I'll bring on and I highlight are markets that I think are ready to turn the corner. Do you remember Darden? It's turned the corner. Amazon was coming down. I think you're going to see it's going to make it for the Christmas time months, Black Friday, Cyber Monday, so on and so forth. And this chart has gotten the pattern where on a weekly basis, you've gotten higher highs and higher lows, and you've come into the first fighting zone. What is the red line? And this is how I teach in my charting course. The red line is the demarcation point, the line in the sand. When the market is under it and you get even the swing line turning up, it's a bear market rally into the resistance. It's got to prove it can get over the 18-week average and stay over it with the swing line staying up. Then I turn to the bull side of the market. When we take a look at Bollinger Bands, you had come down, you held them. You had 3 days of hitting them, you held, you came back up. When you look at momentum in the market, it too has turned itself up. So it never did embed. It's an oversold market. Oversold corrects in one of two ways. They either come up and both numbers get back over the 30 level, and that takes you out of oversold by my definition, or both numbers get under 20 and they embed, which lays in another very bearish case in the market. I don't see that part. So now the question is, what can it do right here? And that's the battleground as I see it. I don't know how many times I've told you how friendly I am Microsoft, but I would never tell my clients to buy over a Bollinger Band. The spots to buy are within the bands normally, and certainly not when you're in overbought territory. In the regional banks, I am really friendly to regional banks. And when you look at this chart, unless you can get back under right here, let's come back a day and see if we can do that. That number would be 4076. I think that the pros are buyers in the 4351. That would be the number they don't want to see. They'd probably blow out. And I think they'd be gearing up here to the 4929 level. When we look at MCHI, these are the Chinese stocks. And what I said, I'll stick with. This is a weekly chart. 6 weeks ago, you had major lows. You've come back and you're fighting your battle at the 18-week average of closes. China is doing events where obviously President Xi has become finally attuned to the serious property market situation he has. His economy has slowed down. They have driven out foreign investors. Today, they come in and they go to 5 EU countries. You don't need visas to come visit us. Okay, so that'll get tourism going. It's a first step. But what crazy person is going to invest there with no protections, and how fast China makes a move? The more successful a Chinese company is, the more China goes after the company to break it. Think of Alibaba and you get the idea. Then after a while, they back off and go, okay, well, what are they going to do with their property market is another question, because who wants to buy a home there when every time you look around, the homes are in trouble? So they go and they tell the banks, which they have done now for a week, we're going to make a list of 50 companies. We want you to make lending to them easy. We think these are the good ones. What they didn't say and needs to be said is, we will protect the loans that you put out. Without doing that, all that you've said is, here's what we want you to do. The bankers won't do it. Either they're private or they're state-owned, and at the end, they know the bottom line is still going to matter. How they say no, that becomes the difficult part and how people get replaced there. But to just intentionally take the bank down because China said, give money to these companies that have big problems, Real problem. So we've got up here, more to this plan needs to be developed. When we come to the industrial spider, you had a lower low, you found your support at the 100-week in the Bollinger Band. If you take my course, you're going to learn this. I just did this moving average part, and I'm teaching it right now. I'll be finished with all the moving averages, I think, tomorrow, Saturday. And I'm teaching this really in depth with the 200-week and how to put this together. You're out of your downtrend. You're not in an uptrend yet. Energy sector. It's not the chart action you're trading. What is OPEC going to do? Specifically, what is Saudi Arabia going to do? Because everybody that agrees to do things doesn't do them. Iran is no longer producing 1.3 million barrels a day. They're up to 3 million barrels a day. Russia had said they're going to cut production by 300,000 barrels a day. They didn't. I mean, the seaborne ships carrying this prove the point. Africa, they have just, and they being OPEC Plus via Saudi, have told the African countries, we're cutting your quotas. And none of them liked it. Of course they don't like it, but they weren't hitting them anyways. But now, in order to say, hey, we've got to defend oil prices, the battle is, especially against Nigeria and Angola, we want you to actually have a lower production quota than we've just given you. Numbers you can hit have to stay down for a bit. Big fight taking place. Are those two countries strong enough to take them on? I don't know. What do you do if they don't? That becomes the issue. So I don't know how this whole thing is going to work out. What I do know is if Saudis get fed up and they say, enough, we're not going to keep the million barrel a day production cut, the market goes into the tank, $10, $15 very, very quickly. That would be my guess. Do I know if I'm right? Of course, I don't know if I'm right, but it'd be a sophisticated guess. So you're at a spot right here that's super important in this energy sector. You're at the lower Bollinger Band. You're at the 100-week average. You're oversold, but you're in a downtrend. Market's going to tell you what's going to come from there. You correct oversold conditions by either embedding and getting even more bearish or getting rid of it by getting a rally in the market. You're right there. In UUP, the dollar index, market has fallen back. You lost your bullish embedded reading. I think the dollar is done on the upside, period. I think that unless you can get back over the high that you just made here, 3017, I think you've opened the door up for all this. So I am looking for ways to be bearish. Now, I said I'm looking for ways, haven't pulled the trigger yet. I'll do that in my morning subscriber videos as the pattern develops itself. In the gold market, if you've taken the headway away of a strong dollar and you've taken away the headway of rising interest rates, both have happened, why would gold be down? And as you can see, gold isn't. So I think gold has more left in it. I think inflation will be stubborn. I think we'll hear the Fed forever talking about it. And as interest rates fall, the economy picks up and inflation, to a degree, comes back. So do you have your cake or do you lose your cake? Which way is this going to go? I still think that you can get back to 188.18, and I still am friendly there. And if I'm friendly there, it's only a question of when I like the miners. Now, the miners, I don't see leading the way right now. You'd have to get a real gold bull market going. You're just at the beginning of the headwind having just been removed. So I think these follow the market more than anything. Tesla, sort of sitting here. At the end of the day, Tesla's problem is, like all automakers, they got to cut prices to sell cars in this environment. The newness of Tesla cars is over. The second phase, they've got to get refreshing. I think the refreshing they've done is, to say the least, terrible. Okay, I don't call that refreshing. A slight new nose. I understand what they're doing. They're doing it the cheapest way they can to tell you it's a refreshed mode, so a little bit of a change here, a little bit of a change there, and it doesn't cost them very much to get it done. And in order to compete against the big Chinese boys, that is the problem they're doing. they'll be on the right side of it if this works by taking out not this week, but last week's high at the 246.70 level. That would get my interest. But until then, I think the bears are hitting the market right here. Stops over there, and they're looking to see can they get the market back to 210.73. I like Uber. I think the worst situation for Uber is over. I think they've developed this drop-off business nicely. I just took Uber the other week, and I loved it. First time I'm there, and all of a sudden it said, hey, Ira, we're right by your house. Do you want to do a ride share? And my fare would have been where I was going. I remember it was $11.60. It was a short hop, but it was early afternoon, no traffic where I was headed. And it'd be truly about a 10-minute ride, 15-minute ride. I said, okay. Car was there in 1 minute or 2 minutes, got in, a young lady was in there and I didn't touch her. And to make a long story short, I got $2.60 off of it. I was the first drop off as it turned off. How convenient, okay? I mean, you'd worry in the wintertime, it's not winter yet, but people get bad colds and the flu, I probably wouldn't do it. But on nice weather still, I like what they're doing. And I've taken rideshare before, but this was different how they worked it out. They told me the amount I was going to get off right at the beginning. They've really got this down. Higher lows, higher highs. Darden, remember what I said? I thought this had come to its end because, why? Because the amount of student payments don't appear large enough that they've really hurt this franchise. All the restaurants they've got. And once we saw that, realized the market's alive. So I think the market, it's a bit overbought, but I think on pullbacks at the 150.75 level, I think you're going to see traders step to the table. I think they'll drop it if you get under 147.28. But remember, when do restaurants make their most money? You're entering the season right now. Banquets, all the different things. They own a lot of top-end restaurants. People go in, they spend a lot of money. I like what I'm seeing going into that. Last Google, sideways action, back and forth, hasn't really put together anything on a chart that I think is super interesting. So you wait. Remember, if you'd like to get the Black Friday Cyber Week special, move your cursor up to the top here, take advantage, it'll be gone, and then you're not going to get this for a bit. I'm Ira Epstein. You have yourself a great weekend. Thanks for watching, and I'll see you Monday.